Hello A plus traders, this is the second module of the Pro Traders course. This particular module is all about harmonic patterns trading. So in this course you will learn what is harmonic patterns, types of harmonic patterns, how to identify harmonic patterns, and how to trade harmonic patterns. So harmonic patterns is a trading concept. It's a strategy on its own which you can use to approach different market scenarios. You know, the market is very dynamic, so there are some scenarios that you need to apply harmonic patterns to it, so you better time your entries and exits. Remember, trading is all about entries and exits. If you don't know when to enter and when to leave the market, that means you are not a trader. You should be acquainted with all the different approach to markets. So you need to equip yourself with all these strategies, all these techniques for you to approach the market properly, no matter the scenarios you see. But before we begin the first lesson of this module, I want you to subscribe to this YouTube channel, A Plus Trading Hub, and hit the notification bell so you don't miss any tutorial updates. So let's begin. Harmonic trading is a highly sophisticated technical analysis method that aims to forecast major price reversal based on chart patterns recognition and Fibonacci ratio alignment. It takes geometric price patterns to the next level by using Fibonacci numbers to define precise turning points. Harmonic chart patterns are considered harmonic because their structures have an integral relationship with the Fibonacci number series. Identified harmonic patterns conform to crucial Fibonacci levels. So I believe you might have heard of harmonic patterns before. They are a bit different from the regular chart patterns like the flag, the ascending triangle, the bullish wedge, and so on. These are a bit different from the not regular chart patterns. Harmonic patterns are formed with Fibonacci ratios and sequence, and they are a bit complicated. If you use a good harmonic tool, you don't have to stress yourself on if the ratios, the Fibonacci ratios on any harmonic is correct or wrong. Though I'm not going to bore you with the Fibonacci ratios, we're just going to look at straight on how these harmonic patterns looks like and how you can identify them and how you can trade them. Your trading platform like the TradingView or the EAs, there are some EAs like softwares and indicators that are encoded with these harmonic patterns. So these softwares already do the Fibonacci calculations or the Fibonacci ratios alignment for you. It's done automatically, so there is no need for us to bore ourselves with the calculations or with the Fibonacci ratios. You just need to take note of the ratios for each of the harmonic pattern to know when an harmonic pattern that you see is correct or wrong. So let's just continue with the harmonic pattern lesson. So first is the Gartley. This is an harmonic pattern. This appears when price has been moving in an uptrend or a downtrend. It's also a sign that corrective waves are ending and the trend may likely continue. Here we have the bearish Gartley and the bullish Gartley. This is the bearish Gartley here, and over here is the bullish Gartley. When trading harmonics, these are the Fibonacci ratios you have to look at for. Like on the Gartley, we have this here, we have this other one here. On the Gartley, all the Fibonacci ratios are the same. If you should look at it closely, all of them are the same. So when you are using your harmonic tool on the chart, all you need to look out for, you need to make sure that this sequence here corresponds with what you have on the chart. And when it matches, that means the probability for your harmonic pattern to work is over 90%. So in trading harmonic patterns, your entry is always at the D point. The D point is your entry, and they are all reversal pattern. Harmonics are reversal patterns. So anytime you see an harmonic pattern, just know that the market is going to reverse. So let's say, for example, this bearish Gartley here, the X to A leg is the first impulse of the trade. Then we have the ABC correction. So after the ABC correction is where you now see the second impulse. So that is why you need to see the XA and the BC leg first. So when you see the XA and the BC leg, you are rest assured that there is a potential harmonic pattern forming. So for the Gartley, you look to enter your trade at the D point. So if it's the bearish Gartley you spotted, you sell at the D point. You sell from here at the D point here, and your stop loss should be at least 50 pips away from the signal candle you got, and your first target should be at the D point and your final target should be at the C point. So the same is applicable to the bullish Gartley. You buy at the D point and your stop loss should be at least 50 pips away from the signal you got. Your first target should be at the B point and your last target should be at the C point. So that is how you trade the Gartleys, either the bearish Gartley or the bullish Gartley. Don't forget, your entry is always at the D point. There is a set example on this. There is a tutorial on how to identify this and how you can use the software on your trading platform to identify the Gartley. So don't panic about this lesson. You get examples, step-by-step examples on how you can spot the Gartleys on a live chart and how you can use the harmonic tool on the live chart. So the next harmonic pattern we want to look at is the butterfly. Just as the name implies, if you look at it clearly, it looks like a butterfly. It looks like a butterfly. These are the wings. These are the wings, so it looks like the butterfly. So we also have the bearish butterfly and the bullish butterfly. These are the Fibonacci ratios for the butterfly. They are different from the Fibonacci ratios of the Gartley. For the harmonic butterfly, your entry is also at the D point. So for the bearish butterfly, you sell at the D point and your stop loss should be 50 pips away from your signal. TP1 at the B zone, B price zone, and TP2 at the C price zone. You don't have to be greedy by taking your final TP to the A price zone. Though price may reach there, but you need to be a bit conservative. Don't be greedy. So your final TP should be at the C price zone. Same with the bullish butterfly. After the first impulse leg and you have the A, B, C, D correction, you buy at the D zone. So when you get price rejections from there or bullish impulse from the D zone, that is when you take a buy trade, and your stop loss should be at least 50 pips away from the signal and your first TP at the B zone price zone and your final TP at the C price zone. So anytime you spot a bullish butterfly on your chart or a bearish butterfly on your chart, that is how you trade. Your entry is at the D zone and your TP is at the B and C zone. Here is the bat. Bat is another harmonic pattern. It's similar to the butterfly. If you look at it very well, it's similar to the butterfly. So for the bullish bat, after the impulsive leg of the XA, and we have the corrective wave, the A, B and C, you buy at the D zone when you see bullish impulse from the D zone or price rejection from the D zone. So you buy from there and place your stop loss at least 50 pips away from your signal, and your TP1 should be, your first target should be at the B zone, and your final target should be at the C zone. You don't have to be greedy. Always remember your first target at the B zone and your final target at the C zone. If price should push up and go above the C zone, you can continue riding with the trend by trailing your stop loss and taking partial as you go. So for the bearish bats, you also sell at the D zone. So after the impulsive leg and we have the correction ABC, you sell at the D zone and place your stop loss 50 pips away from the signal. When you see bearish impulse or price rejection from this D zone, you sell from there, and your first take profit should be at the B zone, and your final take profit should be at the C zone. This harmonic patterns also gives you a good risk to reward. If you can spot them on the charts, it gives you a good risk to reward. The harmonic patterns are very good if you can infuse them to your trading strategy and style. So the next one we are going to look at is the crab. This is another harmonic pattern. So you have the bullish crab and there is also the bearish crab. The crab is a retracement is always a bit deep. For example, you look at the impulse, the XA leg, which is the impulse, is not big, but the price correction is deep. Like the A, B, C correction goes deeper. It goes beyond the X points. If you should check out on the other harmonic pattern, you notice that the corrections, the price pullback does not go below the X point. Okay, the butterfly goes below the X points slightly. Let's look at the Gartley. The Gartley don't go beyond the X point. It stops before the X point. It's the butterfly and the crab that goes beyond, very deep beyond the X point. Like the crab goes very deep beyond the X point. See, it goes beyond the X point. Easily you can spot the crab when you see maybe price was on a downtrend and approaches your support zone, and instead of price maybe bouncing, it start moving correctly to the downside like this. When price moves correctly to the downside like this, if you look at the chart very well, you might see the bullish crab there. You might see the bullish crab. So you look for the correction to break out, then you join the trend. The bullish crab you also buy at the D zone. So when you see bullish impulse or price rejection from the D zone, that is when you buy. And place your stop loss at least 50 pips away from your signal, and your TP at the B zone, TP1 at the B zone, and final TP at the C zone. This bullish crabs gives you opportunity to have a very good and nice risk to reward, because the pullback is always very deep. So when the second impulse wants to begin, it's always very fast. So it gives you opportunity to have a good risk to reward. So as a swing trader or a position trader or a day trader, you can infuse the harmonics pattern into your trading style, your trading strategies. So the bearish crab you sell at the D zone too. So when you see bearish impulse or price rejections from the D zone, that is when you sell, and your stop loss should be at least 50 pips away from your signal, and your first TP, your first target should be at the B zone, and the second target should be at the C zone. Don't forget, you always buy and sell at the D zone when it comes to harmonic trading. So let's look at how we can identify an harmonic pattern before it's completed. In harmonic pattern setup, a trade is identified when the first 3 legs are completed. I said this when I was explaining about the Gartley and butterfly. For example, this is the bullish Gartley. So the XA leg is the first leg, and which is the first impulse. which is the first impulse to the upside. Then the AB leg is the second leg, and the BC leg is the third leg. So the first 3 legs has to be complete. Then that is when you can start saying, okay, fine, we may have a potential Gartley or a potential butterfly or a potential crab. So the first 3 leg has to be complete. Then price starts forming the last leg, the fourth leg. So if you can see from this image here, the XA leg was completed, the XA leg was completed, the AB leg was completed, the BC leg was completed, and price started forming the CD leg. So once price breaks below this neckline here, the B zone, there is high probability that this may be a bullish Gartley, or maybe a bullish butterfly, or maybe a bullish crab, or a bullish bat. So you need to wait for the first 3 legs to form completely. When the first 3 legs are complete and the CD leg has broken below the B point, you can now start projecting a harmonic pattern. When you identify an harmonic pattern, it's also good to mark what I call the potential reversal zone, PRZ, potential reversal point at your B point. For example, this is your X point here, X price zone. So you have to plot your PRZ zone below your X point like this. This zone now, this is where you take your entries. This is where you enter the next impulsive leg. So when you have to wait for price to come into that your zone, and you need to see bullish impulse or price rejection from this zone. So when you see the bullish impulse or price rejection from this zone, that is when you buy. Then your stop loss should be at least 50 pips away from this price rejection zone, and your TP1, your first take profit, will be at the B zone, and your final TP will be at the C zone. So you can see, if you are buying from here, from the PRZ zone, your risk to reward is at least 1:3, depending on when you enter the market. So anytime you spot an harmonic pattern, always plot your potential reversal zone. Just use the rectangle tool and plot the potential reversal tool on the chart. You can draw an horizontal line there on the chart and set an alert. So anytime price reaches there, you are being notified, and you come to the chart and see when you check out for the price actions. So how to trade harmonic patterns? So each pattern provides a potential reversal zone. So your entry should be placed within this potential reversal zone. I've said this in the previous lesson. So when price is at your potential reversal zone, you don't just jump in and trade. You have to wait for price confirmation. So you need to So you need to see maybe a reversal candlestick formation, an increase in volume or volatility, into the projected direction. So this increased volume or volatility are impulsive moves like big body candles. So when you see big body candles into projected direction from your PRZ, that is when you can take your entry. So you place your stop loss at least 50 pips away from the PRZ, like the potential reversal zone. The target should be set at the B or C point of the pattern. So the quicker the reversal, the greater the potential for a strong move. So if price should just approach your reversal, your PRZ zone, and immediately approaches, it bounces off, that means the potential for the trade to move into your projected direction is very strong. So you don't have to miss that move. So when you see that bounce, you start looking out for your entries. So you enter, then place your stop loss at least 50 pips away from that signal, and your take profits should be at the B zones and at the C zone of the pattern. So how to fine-tune your entries when using harmonic patterns to trade? Focus on the harmonic patterns in the higher time frame. Don't try to spot these harmonic patterns in the smaller time frames, like the 1 minute time frame or 30-minute time frames. They are not really reliable. At least 1 hour, one eye is fair enough. At least the harmonics on the 1 hour is a bit better, because it will help you fine-tune your entries. So if you see harmonics on the 1 hour, it's better than the 30 minutes or the 15 minutes or the 5 minute time frame. you need to do pre-preparation. This is what I mean by pre-preparation. You scan through the charts, then you create a list of trades that are about to approach the potential reversal zone. I do this very often. I create a list using my notepad. I create a list of this trades that will approach the PRZ zone very soon. I stick it to the screen of my laptop so that anytime I open my PC to trade, I check those trades. You also insert automated alerts to trade them manually. So you need to prepare yourself to trade any harmonic patterns you saw before a particular time. You can also use pending orders. So if you don't have time to monitor the price actions, you can set pending orders. For example, you notice that a bullish battle will soon be completed, so you can set a pending order at the PRZ price. Within the PRZ, the potential reversal zone points, you set a pending order there, maybe a buy limit order, since you are projecting a bullish bat. So you set a buy limit order there. So once price approaches that level, it will trigger your entry and everything will start running. So even if you are not on screen to monitor the price action, you would miss the next move. So that is how you trade the harmonics. The set examples are also here, so you go through the set examples and see how you can identify these harmonic patterns on your chart and see how you can plot the PRZ zone. Don't forget, you need to plot these PRZ zones anytime you spot an harmonic pattern on your chart, and you have to wait for price rejections before you take an entry, and your SL should be away from the signal, and your TP should be at the points B or point C zones. So these are how you to fine-tune your entries and stop losses when you are using the harmonic pattern approach on any currency pair or commodity or any financial market, be it forex, crypto, or equities, or binary. So these are a few questions for you. I urge you to attempt answering these questions. This is the only way to track your learning process. If you attempt and you can't answer them, that means you need to go through the tutorial again. You need to go through this particular model again. Remember, you don't just pass your exams by reading only once. You need to read over and over and over again. So same is applicable to trading. You need to go through the courses over and over again for you to understand better, and also look at the set examples. So when you go through them over and over again, you practice on the live chart too, so you get familiar with the price movement and get familiar with the charts. If you don't practice, there is no way you can increase your winning rates. So you need to practice. So I urge you to apply whatever you learn from this course, and that is the only way your winning rates will be increased and you make more profits and more money from trading. So that is how far we go on this second module of the Pro Traders course. Make sure you subscribe to this channel, A+ Trading Hub, and hit the notification bell so you don't miss any of our updates. Kindly follow us too on our social media handles on Facebook, on Instagram, and on Twitter at A+ Trading Hub. And if you want to discuss with me personally or directly, you can WhatsApp me on the phone number you see on the screen here. Thank you for your time.